Welcome to the Brain Picker Pro Show, live from Lake Wiley, South Carolina. I really appreciate you guys watching and listening. This is the show where we interview experts, rock stars, people I know, like, and trust. That's the only people you'll see on here. People I know, like, and trust, been working with, I know, I have a relationship with, and know what they're doing, and they're the real deal. So please share, please like, please leave us some feedback, please leave us some comments. We really, really appreciate it. Thank you so much for watching and listening. And today's special guest, good, long time friend of mine. I've known him for years. I have his training right here, gone through his training. He is the man, the legend, and the myth, and he's really, really good at what he does. And I've known him for a long time. He's actually been to my office, and we've hung out quite a bit. Please give a warm welcome to Lance Edwards. What's up, buddy?
Well, Larry, thank you so much. It's a great pleasure and honor to be here on your show, and I admire everything you're doing, and so really, really great to be here.
Awesome. So tell us a little bit about yourself, just so for people who may not have heard of you. I'm sure everybody has, but just if there's one person out there that's been living under a rock.
Fair enough. So my story is similar to a lot of people. Back in go back to 2002. I had a full-time corporate job, working 60 hours a week. Wanted to find an extra stream of income, and I discovered real estate investing. And but I went a little different route than most people. A lot of people get started in houses. I got started in the niche of small apartments. These are 2 to 30 unit buildings. And my very first deal, and you'll love this, Larry. My very first deal I bought with seller financing, 100% seller financing.
Yeah, baby.
Did it over the phone with a lady that I did on a direct mail campaign. Never even met her. Bought my first property, and that was my first deal, which, by the way, was also, it turns out, my most critical deal and the scariest. And I find that's true for most people, that first one. But I got that first deal on my belt, and over the next 2.5 years, I did 50 deals, bought more fourplexes, and it was a 10-unit, 50, 56, 85-unit projects, always buying with OPM, other people's money, just like I've been taught. And within 3 years, I was able to retire from my corporate job of 20 years. That was back in 2005, a couple of years into that. I was at my real estate club, and we're president of a great club. We have a great club down in Houston, and they asked me to come do a little seminar. I said, Lance, how are you doing these apartment deals? I had my very first seminar in 2007, and since then, I've been teaching tens of thousands of people how to get on their path to financial independence. And so we're very active in the training business. I love teaching people what we were never taught in school, the fast path. And so number one, I love training, and number two, I love doing deals. I know you do as well, Larry. And very often, occasionally, we partner with our students and do deals together. So that's my story. And I got to share this. I got to give a kudos to our host here, Mr. Larry Goins, and our company has been growing leaps and bounds. And I got to tell you, about a few years ago, Larry hosted me at his office, as he said, and he gave me one tip that I took action on it. Here's the key part. I took action on it, and as a result, our company grew 7-fold, and we've been listed 3 years in a row by Inc. Magazine's one of the fastest growing companies in the country. So that's my story. But thank you, Larry. Thank you for that tip. That was a good tip.
Awesome, Lance. I really appreciate that. Thank you so much. I really, really appreciate that. That means a lot. I'm glad I was able to help.
Oh man, it was fabulous. It was a nice tour. Thank you, Larry.
Awesome. So you got started. You did your first seminar in 2007, and you were able to quit your job in 3 years, right? And now you teach people how to do multifamily. Now you're not really talking about 100, 200, 300 units. What is your niche?
All right. So this is a great question. And my niche is small apartments, which we define as 2 to 30 unit buildings. So it's duplexes, triplexes, fourplexes, and the small end of commercial, 5 units up to 30.
Right.
And it's interesting. And the reason I picked the niche is because I think it's the best place to start. By the way, the way that I teach you to do a 5-plex is the same way you do 500 units. So it's all based upon apartments. It's just very simple math, how we analyze these deals, et cetera. But I believe, because I said up front, the most critical deal is going to be the first deal. It's also going to be your scariest. And so my job is to get people into their first deal, get that boost of confidence, and then from there, their brain will take over to start doing big deals. So we've chosen this niche of small apartments, and I tell you, there's a lot of advantages to it. Let me share this with everyone. First of all, there's lots of small apartments out there. There's plenty of them, and you can, when you get two things you can do, just like Larry does with houses. You can wholesale them, or you can buy them and hang on to for cash flow. Well, if you wholesale them, there's lots of buyers. Matter of fact, single-family landlords are the biggest buying group of small apartments. So there's lots of buyers that you can match them up to. When you're buying them, even though they're apartments, they're not like really giant ticket items. You don't need a lot of money for for the down payment, because often we buy them on seller financing, the same thing that you teach, Larry. We'll buy them on seller financing, and if we need a little bit of down payment, then we go raise that from a small IRA investor. So, and all you need is one to get started. And so it's a great niche. It's a very lucrative niche. A lot of people aren't even aware that you can wholesale small apartments. A lot of people aren't even aware you can buy small apartments on seller financing, just like you teach. And so we've chose this niche as really very lucrative in its own right, but it's also the gateway into moving into mid-size and larger apartments.
That's awesome. That's really, really good. So you mentioned several things here I want to touch on about small deals. A lot of them are single-family investors. They move into that. It's a great way to get started. How do you find most of these deals? Where are you finding them? Are you doing direct mail? And if so, what's your criteria? Or are you doing, going out and talking to property managers? Or are these mostly mom and pop self-managed, or what?
Yeah, great question. Great question. There's three primary means that we teach and use into getting deal flow. And we're doing it across the country, by the way. But first, let me just give them to you and we'll talk about it. Number one is websites. Number two is brokers, agents. And number three is direct mail. And websites are places like MLS. A lot of people don't realize, if they think of MLS, I think of houses. Well, primarily houses, but you find a lot of small apartments on MLS.
Right.
Another website, of course, is LoopNet, LoopNet.com, which is commercial listings.
Right.
And those are properties that are formally listed for sale. And so that's one source. Another source is brokers or realtors who the thing is, you can go to LoopNet, but when a broker gets a new listing, the first thing they don't necessarily put it on LoopNet as the first thing. The first thing they do is they go to their people who they have a relationship with. Exactly right. They're going to call them. It's called a pocket listing. And so we use scripts, and we teach people how to, on the first call brokers and develop a quick relationship so they can get on their radar. And there's a process of follow-up to make sure they're receiving these pocket listings. Now, I want to share something here, and Larry, you'll appreciate this. Up until recently, the youngest student I had who was successful in calling brokers using a script, we had an 18-year-old who was calling these brokers. He didn't know nothing from nothing, but he knew how to read a script. So we got him on the script. He found a deal that he and his dad went out and flipped, wholesaled the building, made $30,000 in the first deal. And so I used to brag about him. His name was Dylan Batinghouse, and I still brag about him. He was great. Until recently, I was at one of my events, and a 12-year-old was there with his aunt and uncle. Coincidentally, his name was also Dylan. And the 12-year-old had been calling brokers using the exact same script. And I said, Dylan, that's phenomenal. I said, but aren't you nervous? I said, first of all, didn't they ask you for a proof of funds? No. Did they ask you how old you are? No. Well, weren't you kind of scared talking to them over the phone? He said, what to be scared of? They can't come through that phone and get me. We're just talking. and I share that story because if anybody is a little nervous about getting on the phone like I was when I was getting started, listen, think like a 12-year-old. Just pick up the phone. Nothing can happen. So that's the second way we get deal flows is through brokers. The third way is direct mail. And as far as I'm concerned, this is the secret weapon because it puts us in direct contact with an owner. There's no competition. Most often the property is not even for sale. And that's how we get our owner finance deals is talking straight to the owners through direct mail.
That's awesome. So tell us about the direct mail. What's your criteria you're looking for? Do you look it up on like List Source or something like that, and
Yeah.
just send out a list? And if so, how wide of a geographic area are you looking at?
So what we do, first of all, where we get the list from. A couple of things. You can certainly go to a list broker like List Source. We use a service called prospectnow.com. And you pay them a little bit of money, and you tell them what you actually go on their website. And you can pick up the criteria, the location, the size, etc. You can download a list. But another source you can use, a lot of people don't realize, is the old county appraisal district. That because every county maintains a database of all the property and who the owners are, so they can tax them. Well, many counties, if you call them up, they'll send you their database for free or a few dollars. They just, okay, send me $4 is the cost of the CD, and they'll send you the database. So that's very, very low cost and not free. I know in my county, Harris County, down in Texas, they'll do that. So you can call the county or get it for free, or you can use these websites. Now, our criteria is, and I'll share with you, we run a lot of campaigns nationwide on behalf of our students. It's actually a done-for-you service we do for them. And so we're running, we have, thousands of postcards running, constantly out across the markets. And so we're choosing markets all over the country, really with a criteria of 2 to 30 units. And there are many ways to get more scientific than that in terms of, how much equity do they have? Are they in probate? We don't do any of that. It's just a choice we make. We just send the postcards out and see what comes back. And then we make a decision based on what comes back. What are we going to do with this deal? We're going to wholesale it. We're going to buy it. We just let the market tell us what to do with each transaction. So we're just doing massive mailing.
That's really good. Now, I've often wondered, because we wholesale, and this is kind of a side question. I've often wondered, is there a way to find a list of single-family houses that have tenants in them, that are rented? Not just absentee owners, but that actually have tenants in them. Is there any way to find those?
Well, that's a great question. You certainly can find rental houses by finding the properties that, either one of two things. The owner has a different address than the property address, or that house is not homesteaded. It doesn't have a homestead exemption. So you certainly can find the rental houses. Now, if there's someone in there or not, that's a great question. And I'm sure there's a way, but off the tip here, I can't say what it would be, but that'd be a great source to go after.
I was just curious about that, because we buy a lot of houses from landlords. And of course, a lot of the people we direct mail to, absentee owners, the house is just vacant. Maybe a family member's using it or something, but it's not got a tenant in it, right? I was just curious about that. Okay, so you've talked about, you get them off the MLS, LoopNet, direct mail. You use prospectnow.com to get a list. And so now let's talk about analyzing these deals. You say you really analyze a deal, a small multifamily, pretty similar to the way you would analyze 100 units or whatever. Can you give us a kind of a, not quite a 30,000, but maybe a 5,000 foot overview of how you analyze these deals?
Sure. And, well, let me make one distinction here. This is important for everyone. So we're saying small apartments of 2 to 30 units. They get segmented. If they're 2 to 4 units is residential, 5+ units is commercial. Now, if it's in the residential sector, you're going to run comps the same way, Larry, you would teach on pulling comps. It's comps.
Right.
When you get into the commercial space, 5 units and above, you evaluate apartments based upon something called the cap rate, which means the capitalization rate, which is basically, if you buy a building, what's the return on investment? Because these are income producing properties.
Right.
And the cap rate, so everyone knows, it's a very simple formula. You take something called the NOI, the net operating income, and divide it by the price of the property. That's your cap rate. And the NOI, which is the net operating income, is simply the revenue minus the expenses. And so when you know the cap rate, the way we analyze it is you want to buy, it's a little bit backwards, everybody, so let me try to step you through this, but you want to buy at a cap rate higher than what's called the market cap rate. The market cap rate is what is determined by each individual market, and it's the cap rate at which the retail market is willing to accept on an apartment building. So, for example, in Houston, where my operations are, so the market cap rate there on a Class C building is 8.5%. That means the market will pay a price that will yield an 8.5% cap rate on retail price property. So I want to find properties I can buy at a cap rate above 8.5%, because if I'm buying at a cap rate above 8.5%, I'm paying a price that's below the market price. So we're trying to buy properties above that cap rate. So, and going, with that foundation, going back to the question you were asking, Larry, so whether it's 5 units or 500, the way every commercial apartment building is evaluated is based upon cap rate. It's because it's an ROI evaluation.
Good. Now, what's the best way to determine the local cap rates for a specific geographic area?
That's a great question. That is a great question, because it all hinges upon this. The best way, there's several ways. I'll tell you a number of ways. You can go on a website, CBRE. You go to the CBRE website, they will publish market cap rates for the major MSAs, the large markets. They're probably about 44 market cap rates. Now, if you're not in one of those major markets, then what are you going to do? Well, a great source, if you can get access to it, is a commercial appraiser. A commercial appraiser in that local market will have the market cap rate, because that's how they're evaluating properties. But the simpler and the quick and easy way to do it is calling commercial brokers. And you're going to call, and I recommend you get 3 opinions. Call a commercial broker in that particular market you're interested in.
Right.
And you want to ask them, what is the market cap rate? And, make sure they're all kind of consistent and take an average.
That's really good. Good stuff. Is there any specific rule of thumb? Because, you and I both know in the small, especially in the small multifamily space, the owners, the small operators, they don't keep as good of records as the professional management teams that are managing the 100, 200 plus units. So how do you arrive? I mean, listen, you're going to get a seller on the phone and they're going to say, oh man, I spent nothing on repairs last year, right? Do you have some rules of thumb if a seller doesn't have any records, or they're being evasive, of X percent you can count toward income or X percent as expenses?
That's a great question. Because in the world of small apartments in this niche, Larry's spot on, because these are mom and pop owners.
Right.
They're mom and pop. And by the way, they've probably been managing the property for years. And the number one reason they're thinking about selling is because they want to move on. They don't want to mess with it anymore. So, and because they're mom and pop individual, they don't have a management company. They're self-managing. And so their idea of a management system is a shoebox full of receipts.
Right.
that you can ask them for a management report, and they're not going to have anything. So what we do, and this is very, very important, so we can estimate the expenses through what's known as the average expense ratio on apartment buildings. Well, the average expense ratio for apartment buildings is 45%, which means if you take what's called the gross scheduled income, which is simply the number of doors times the rent. Let's say you got 10 doors and the average rent is $500. So 10 doors times 500 is $5,000 a month times 12 months. That's $6,000. No, excuse me, $5,000 a month times 12. It's $60,000 a year gross scheduled income. 45% of that $60,000 would be the average expenses, or $27,000. So now that 45% includes a management fee, because I don't want anybody self-managing these buildings. You want to hire a management company. The reason that owner is selling because he got burned out managing it. So, but that 45% expense ratio includes everything: the taxes, the insurance, the management, the repairs, and that's going to use 45%. And frankly, when we're making offers, we don't even ask for the financials anymore. We just use the 45%. We will try to get any financials once we get under contract and into due diligence.
So you're saying you can really make an offer and move through and close on a deal if you just use that rule of thumb of 45%?
Absolutely.
Wow, that takes a lot of the work out of it, doesn't it?
It does. That means you can make offers just like that. Matter of fact, what we've done is because of that, we've actually automated a lot of the analysis. We have software tools that we use. We've automated a lot of the analysis, and we've actually, and you'll appreciate this, Larry, we've automated the offer generation. So, once I know the market cap rate in a particular market, and if I know the rents and the number of units and the vacancy, I've got software now that will literally compute the offers and spit out a letter of intent automatically, so we can shoot offers off to those sellers right away. Because it's all about the math. It's simple math.
So correct me if I'm wrong. Let's take that house, that property that's bringing in $60,000, right? So $60,000 at 45%, you're at $47,000. So let's say
$27,000.
20. Oh, okay. 60 times 0.45 is your expenses, 27,000. So you got 60,000 minus 27,000, right? So you got $33,000 net income. Are you going to take that and divide that by, let's say the cap rate is 8%?
Okay. I want to make yes. Okay. Let's step through this. I'm going to make one adjustment. So we're at 60,000 gross scheduled income. We're going to subtract 45% of expenses, 27,000, and I'm going to subtract 10% for vacancy, because I always build in a vacancy factor of at least 10%. That accounts for people moving out, not paying, whatever. So that's another $6,000. So my NOI, my net operating income, is $27,000 per year. Okay. And if the example you gave, Larry, let's say the market cap rate 8%. So we take 27,000, get my calculator, 27,000 divided by 8% is $337,000. I'm doing my math right. Is that right? 27,000 divided by 8% market cap rate. Yeah, 337,000. That is the retail value. That is the market price retail value of that building, $337,000. Now, if we're going to be paying cash, we want to get it at a price lower than $337,000. That leaves me some spread. Now, and Larry, I know you appreciate this. However, I want to go in and buy it for owner financing. I want the terms, with the best terms I can get. I'm willing to pay retail price if I can get the right terms.
Right.
And so we actually make multiple offers to these sellers. There's two seller financing offers we make and one cash offer we make, all in the same letter of intent.
Right. So it's 45% plus the 10%, really 55%. 55% of that.
Correct.
And then you just divide that by the cap rate, and there's what the retail value is. Anything below that is going to be a deal.
Correct. With one exception. I will pay that price if I can get very, very good owner finance terms.
Good. How much below the cap rate price? Like in this case, it was, what did you say, 337,000 or something?
Yes.
How much below that would you advise your students to pay for the property?
What we tell them when we target them is 17%. They're just a ratio I use. It's 17%. If I'm going to pay, it's going to be a cash purchase, or meaning I've got to go raise financing to cash that seller out. We're going to start at 17% below.
Yeah, explain that if you will.
And
17% below the 337.
Yeah, let me explain it this way. And there's a lot of people listening that may have heard the rule that you want to buy apartments at a 10 cap. Okay. Well, that rule is based upon, it assumes the market cap is 8.5. Well, 10% is 17% more than 8.5%. So what you really want to do is if the market cap rate, let's stick with your example of 8. If your market cap rate is 8. What I want you to do is add 17% of that. So let's take 8%, multiply that times 1.17, and that's 9.4. So I want you to buy it at 9.4% cap. So in Larry's example, we take the $27,000 NOI, divide that by 0.094. So my maximum offer is $287. which is $50,000 below the 337. That's my maximum offer is at 287.
That's good stuff, man. That's good stuff. I appreciate you taking the time to explain that, because that's what people want. They want the details, and you gave it to them, man.
Yeah.
I appreciate that. That's good stuff. So, so we've talked about how to find deals. We've talked about how to analyze deals, right? We've talked about the market. We've talked about the cap rates. How do you find a good management company?
Great question. Great question. Because by the way, here's the rule: never, 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 never self-manage your own building. Because you get 6 months into that, you're going to be out. You're not any good at it. So we hire professionals, and so let me tell you what. First of all, let me tell you what you're looking for and what you're not looking for. You're looking for a management company, and by company I mean they have a staff in place, they have processes, they got this exclusive focus on managing multifamily properties. They probably have 400 doors under management. They got many, many owners, clients. That's what you're looking for. What you're not looking for is somebody that is a realtor and they're doing some property management on the side to earn an extra few bucks. No, that's not what you want. You want somebody that's focused in this area. And so to find these, the best way. Well, first of all, there's a number of sources. There's a website called IREM, IREM.org or com, IREM.org, and they have lists of certified management companies, and that's a good source. But what I recommend is the best source is always referrals, is from the local agents, the people that are in that marketplace, seeing the transactions being done. And by the way, you're developing relationships with them already, because that's one of the ways you're getting deal flow, is to ask for referrals from these local agents, because they know what the real scoop is. And then from there, it's an interview process. We have a 17-point, it is a comprehensive interview to really find the true management company, to see if they really know their craft. And I will tell you, in my opinion, the number one attribute that you're looking for in a good management company is they are aggressive marketers, meaning when it comes to leasing your building, they don't just go stick a sign on the side of the road, hoping somebody's going to stop by. They've got massive marketing going on. They got multiple means of attracting prospective tenants, because you want to keep 100% occupancy. Matter of fact, you want to have a waiting list. And so,
right,
that's what we're looking for with these management companies. They know how to fill these buildings up, because that's where your wealth, your cash flow really comes from, occupancy.
That's awesome. That's awesome. I really like that. And I've got the checklist. I have it. So,
that's exactly right.
So Lance, you mentioned early on in the conversation that you partner with your students some. How do you structure that? How does that look?
So a couple of ways. We do it on wholesale transactions. And so students who've been trained, first of all, they got to be trained so they know our system and what to go find a real deal. They bring the deal, and then we will advertise and market the deal to my buyers list. We put it on websites all across. We put it on my website. I have a website at smallapartmentdeals.com, but we actively market that property across all these different sources. And then when the buyer leads come in, we screen them, we qualify those buyers, and then we'll negotiate on the assignment fee, and then we do a split with the student. That split varies upon how much the work they did, and it's 50-50. If they're just kind of throwing a lead to us, it's going to be less than 50%. But they're bringing us leads. And I will tell you, it's a really interesting couple of stories maybe you'll find of interest, Larry. So we did one I'm going to share with you. This was 2 properties, 2 duplexes in Indiana. Now, we're in Houston. 2 duplexes in Indiana. We put them under contract, sight unseen, using the exact same ratios I just shared with everyone. We have them under contract. We want to wholesale. So we started marketing the properties, had buyers coming in. Our buyer came out of Switzerland. And the buyer paid us $50,000 for the contract. And that wasn't his purchase price. That was my profit. He wired $50,000 into my account to purchase the 2 contracts, and then he went to closing. And I share that story because it really, when that happened, it kind of really changed my whole mindset, because the idea, first of all, getting properties in Indiana, sight unseen, that's cool. But the idea that our buyer base becoming not only from this country, but from another continent really, really impressed me. And so I say that we're talking about wholesaling these properties, these income producing properties that a management company is going to run. You can find them all over the United States, and you can market them literally all over the world. And I'll give you one other case study that's on the bigger end of the side. We had a couple of students actually up in your neck of the woods, up in the Carolinas. They found a property in my backyard in Houston, 294 unit building. We put on a contract to buy for $11 million and wholesale it to a buyer out of Canada. So it's a very fun, interesting space with a lot of opportunity.
I love it, man. That is great. That's really good. Now, you wrote a book. You're a best-selling author as well, and you wrote a book about small apartments, right?
I did. It's I think coincidentally I have one right here, Larry. And so I have a book. I wrote How to Make Big Money with Small Apartments, and it came out with #1 on Amazon. And I'm really proud of this. Put a lot of energy into this, and it lays out, how the business works step by step, the math, how we find them, how we fund them, everything that we do. And very, very proud of this. How to Make Big Money in Small Apartments. You can get it on Amazon.
So what does someone have to do to get a copy of it?
Well, I'm going to make a special offer for your folks. And you gave me a tip one time that really paid off. So what I want to do is, you can get the book on Amazon. It's $14.95 on Amazon. Or I got a better offer for you. I'll give you the book for free. I'll offer your listeners, your subscribers, the book for free. I'll give you a website to go to, and I'll send you the book for free. We'll send you some other resources along with it if you'll just pay the $6.77 shipping and handling, which I think is a fair offer. If you cover the shipping and handling, we'll send you this book and some other resources. That website to go to is freeapartmentsbook.com. Freeapartmentsbook.com. Apartments with an S. Freeapartmentsbook.com, and we'll get this sent to you, physical book and the other training resources right away.
That's really good. And that really is free plus shipping. I know, because I pay almost $6 just for the printing of one of my books. So I understand. I know it's not like you're paying $1 a piece for them and making $5 for every one of them, which is not any money anyway. But still, guys, you need to go get that. Freeapartmentsbook.com. So, Lance, buddy, I really, really appreciate you being on. This has been some really, really, really good content, really good information. Thank you so much for sharing, man. I've got a whole page full of notes here. I'm really excited about it, and I'm fired up even more now. And I want to go get some more of these small apartments, because I'm already buying a lot of single-family houses, 6 units, 8 units, 12 units, whatever, but they're all single-family houses that one person owns. So I'm going to add this to what I'm already doing. So I'm really excited about it. Thanks, buddy. I really appreciate you being on.
Larry, it was absolutely my pleasure. And I really appreciate everything you're doing. You're doing great stuff. And so that's an honor to be able to share what we're doing with your listener base.
Sounds great. Thanks a lot, buddy. You take care.
All right. Bye-bye.